You know, the thing about crypto or digital assets or, whatever we want to call it, is I always say it's like Saudi politics. There's the king, the crown prince, and all the other princes that hate each other. So in Saudi, you got the king and the crown prince. That's all that matters. And all the other princes want you to buy their oil, not the other prince's oil. And they're like 8,000 of them, like 8,000. So yeah, same thing here. You got Bitcoin, you got Ethereum, and then you got all these other, trying to take the same amount of dollars from somebody else. But the difference is, unlike politics and oil, here there can be actual development. And so where the endowments play primarily is in the venture side, where you're trying to back founders to build businesses or, start protocols that have, something beyond the meme-ness or the utility token.
Welcome back to Money 101. Today, we explore the insightful analogy drawn by Mark Yusko, drawing parallels between the crypto landscape and the political dynamics in Saudi Arabia. This analogy underscores the clear dominance of Bitcoin and Ethereum within the digital asset realm. As we navigate through the year 2023, Bitcoin has notably strengthened its position, outperforming Ethereum in various aspects, such as market capitalization, NFT sales, and fee generation. This aligns with Yusko's analogy, shedding light on the competitive nature and ongoing evolution within the crypto space. However, there's a deeper layer to this dynamic. The cryptocurrency sphere is alive with innovation and progress, extending beyond mere digital currencies to include groundbreaking technologies and protocols. The venture capital sector plays a pivotal role in this landscape, providing crucial support to inventive founders and startups, ultimately driving the growth of blockchain technology. Don't miss out. Remember to subscribe and give this video a thumbs up to stay informed about the ever-evolving world of cryptocurrencies.
The pension funds, they're just scared. And very few have done anything. A few have done a little bit. But we talked to one just last week. Giant pension, $200 billion. And we've been talking to them for years. And they were on the verge of investing in 2021. And actually, you know what? Good for them. They pulled back in 2022 with, Luna and then 3 Arrows and then, Voyager and Celsius and BlockFi and FTX. They're like, we're done. But now, see, this is the part where I get super excited. If you look at history, after economic downturns, which you don't want to call it a recession in 22 and 2, I don't care. There was a recession. It was like 2001 recession, shallow, but it was a recession. Market fell 25%, that's a recession. Two negative quarters. After that happens, you get an unbelievable period for investing in venture capital. So the 23-24 vintage is going to be one of the best vintages in the last 40 years. And the quality of teams that we're meeting with every day is off the charts, right? 650,000 people got displaced by the big tech companies. Not all of them can never work again. Some of them have to do new stuff. We met a team, yesterday, ex-Googler, ex-FinTech, and they're building a really interesting platform in digital assets. So that innovation wave is happening. And the other cool thing is this: what I love. I'm having more fun today than I've ever had in my career. And I love my career. I love working in endowments. I love building an asset management firm. But now, old guy gets to hang out with young, passionate, enthusiastic, intelligent people who are building the future. And that's awesome. And this wave, look, I was in the internet wave. We invested in all the early companies from Yahoo to eBay to Google to everything. That wave of talent was amazing. Consulting, banking, technology, healthcare, huge wave of talent, the Sergeys and the Larrys and all these amazing people. This talent move, way big. It's unprecedented, the number and quality of talent that has migrated into this space. And so when people say stupid stuff like it's a fad or it's going to zero, I'm like, name a technology, right, that has gotten critical mass that went back in the bag. You just can't do it. The institutions are coming. It will certainly help when BlackRock is deemed, the axe. or the boomer, the boomer rapper, as people like to call it. When people are afraid, they're very dangerous. And the banks are very afraid. The brokers are very afraid. And that means they're dangerous. And when you throw on top of that, maybe the weakest government we've ever had. I mean, maybe there were some others that were weaker, but this one's pretty bad and can be bought and paid for very easily. And look, in the 90s, AT&T and Verizon tried to kill what you and I are doing right now, right? We're using voice over internet protocol to talk for free. They wanted to make that a criminal act. And they got a bill passed, and Al Gore killed it, thankfully. So he did save the internet. He didn't invent the internet, but he did save the internet. But they're going to go that way. So 2009, 2015 was the first part of the quote. First, they ignore you. Bunch of nerds and geeks playing with their magic internet money, whatever. Then they laugh at you. 16 to 21. Nerds, geeks, you guys are crazy. I mean, what the hell? Blockchain, Bitcoin, Solana, whatever. Then they fight you. 2022, and I think sadly to 2027, they're going to fight. And they're well-funded. They're politically connected. And they're not dumb. Like someone said, Jamie Dimon's so dumb. You don't have to like him, but he's not dumb, right? And he's intentional about, telling you that this is for money laundering, that he'd make it illegal. Well, why does he say that? Well, because he's a monopolist. And monopolists don't like competition. JP Morgan had the famous line in 1907. The Knickerbocker Trust was taking assets away from JP Morgan. And he famously quipped, "I like a little competition." And magically, there was a rumor spread that Knickerbocker Trust didn't have all the money they said they did. And you've seen the picture in Wikipedia of the bank run, the women in the top, or the guys in the top hats, the women in dresses and umbrellas run into the bank. And that was fomented by him and the Rothschilds, and they basically, and then he got a bill passed, the Trust Act of 1907, that let him buy all those assets and create the dominant superpower bank that still exists today. And so, are they going to do more of that over the next couple of years? But the good news, if you're here, we've already won. This tech is unassailable. It will dominate the future. And it doesn't mean every project will be a winner, but the tech and the movement and the opportunity set is indomitable.
In the face of apprehensions and pushback from conventional financial establishments, the technological underpinnings of cryptocurrencies and blockchain are demonstrating their impregnability. The year 2023 has emerged as a turning point in the crypto narrative, characterized by Bitcoin's diminishing connection to traditional assets, regulatory hurdles, and unforeseen rebounds such as Solana's resurgence. Despite the obstacles, the crypto realm persists in its resilience and ongoing innovation. To delve deeper into the dynamic realms of crypto, finance, and the mechanics of money, make sure to subscribe to our channel for regular insights.